Hey everybody, Tom Gentile. Welcome to week 3 of Tom's Trading Essentials with Optionetics and Tom's Trading Room. Glad to have you guys here. It is straight up 8 o'clock. I'm looking at it from my Apple Watch, which, wow. I mean, I like the watch. I took it off for some time and then I put it back on, and all the software updates I had to download. It took hours to get the thing back online again. That's what happens when you go from an Apple Watch to a Fitbit, back to an Apple Watch. Anyway, crazy. Jay, how's your evening or afternoon going today?
I had some time with the grandbaby, so everything is going great. 2-month-old granddaughter is over, so wonderful time.
Awesome. Well, I'm actually, I've been back for several days now from New Zealand. I'm back in Florida again, and just about got the lag time beat.
I was going to ask how that jet lag is. Yeah, good.
Yep. So we got a good one for you tonight, guys. We are actually going to be getting into several different things. We're going to do a review of the last 2 weeks, and I want to get into trading the money calendar, and I also want to show you some money patterns, some different money patterns I want to touch on. And tonight we are unveiling, and this is this is still in beta, but we are going to be releasing our apps. I want to show you some brand new apps that we have for the iPhone and for the Android devices. All right, and I'm going to talk about how you can get your hands on those as well. So we've got those. It's kind of a new thing. We've been working on apps now. Gosh, I want to say we've probably been working on for about 6 months. So I got that to show you. We got some trades. I want to catch up on all the trades we were talking about, the ones that we talked about in week 1 and week 2. We'll take a look at those and see how those are doing. We'll just look and see how the stocks are performing. The stocks are performing. The options are going to be performing plus or minus a little bit there as well. So again, all this and more. This session's being recorded. We'll get the recording out to you as soon as possible. Also, if you have questions, which many of you do, you can put them in the Q&A box that's attached to your side of this webinar. I can pretty much guarantee you we will not be able to answer all of them. We have so many people that join on this Optionetics, these Optionetics webinar series, that there's just no way we could answer all those questions. So I want to apologize to those of you that we do not get to. Keep in mind that you can always use support@tomgentile.com, and we'll try to answer questions there just in case we don't get to your question. And then finally, you see this disclaimer on the screen. You can read this in its entirety. All you have to do is just pause the recording that you'll be receiving later tonight. But I want to mention 2 big things. Number 1, in bold black letters up there at the top, stock and options trading has large potential rewards, but also large potential risk. The other part, under disclaimer of warranties and liabilities, basically says that me, Jay, and everyone else associated with Optionetics and Tom's Trading Room, we are here as your educators. All right. We are not investment advisors. We are not brokers. We do not give specific trading advice. And obviously, you need an options account to trade with, and you must meet certain requirements. Everything I'm going to talk about tonight is in US dollars unless noted otherwise. All right. With the particulars out of the way, let's talk about a review of prior weeks, and then I'll also talk about trading with a money calendar. And we'll get into some money patterns if we have a little bit of time too. So on week 1, and I really pushed this down to just a few slides because I want to give myself plenty of time to talk about tonight's topic. We talked about calls, we talked about puts, and in week 1 we talked about the energy pattern, the oil and energy opportunities pattern, which is basically going on between now and July. So it's a 5-month pattern: February, March, April, May, June. Well, if you add all of them in there, it's 6 months, but really mid-February to mid-July is a 5-month pattern. This pattern, what we're looking at is we look at the fact that oil and energy, for the most part, tend to rise during the spring and summer months because there's more demand. And then they tend to fall off during the rest of the months when there is less demand happening. And that pattern is taken from the great country of the USA right here. That's where all the oil demand happens. I mean, we are, no matter how technologically advanced we might be in wind and solar and even battery technology, we still seem to really suck up those fossil fuels. And it does create a pattern here that has worked time and time again. So what we're looking at is we're looking at diversifying in that pattern by looking at XLE. And at the time I showed you this, which was back on the 7th of February, remember 2 weeks ago, this was what XLE was trading at that day. We were looking at the June 21st, 63 calls. All right, buying to open those at $3 or less. So I want to just quickly show you, we're going to pop on over to Tom's Tools, and I'm just going to go in, and how about we go to the option chains? And over here, I'm going to type in XLE. I'm going to show you this chart, this trade once again. So what I want to do is I want to go back to the 7th. So we're going to go in and change the date over here to February 7th, 2019. I'm going to click Go. Now I've got XLE, and I'm going to be looking at those June options. So I've got all my expiration months here. Here's June. Let me go ahead and click Update. And we're going to go down to that June 63 call. There it is. All right, it ended up closing out at 210. But let's go ahead and put a risk graph in and buy one. And then let's go ahead and let's reset it to the limit of 3. Because we can change that to whatever we get filled at. And then we can save it. And now I've saved that trade. And now what I can do is I can actually walk forward with this trade. So I'm going to walk forward a day at a time. Here goes the 8th, and you can see it's up $11. And then here goes the 9th, and now it's up $20. All right, so we're up 6.7% in 2 days. All right, finally we get to the 12th, that's a Friday, we're up $70 or 23.3%. Now we go to Monday, 38%. We go to Tuesday, 39%. Here's Wednesday. We just passed Wednesday, excuse me. We back, oh no, that's right. That was when the 14th was Thursday. So let's back up to Thursday. I moved a little too quick there. Up 39%. All right. The 15th was a Friday. And I can keep doing this. There's a 66%. Let's see where it is right now. So we bump ourselves up to the 21st of February tonight, up 49%. Nice. That one's moving along really well, and you can see what's happened since the 7th is we got that nice little move up, but it did pull back. Actually, yesterday it was up even more. If we go back and do a minus a day, you can see that it was up 72% or up $218 on a $300 position. Now, I'm not going to do that with every single one of these, but I want to show you that you can do that. We have backtesting capabilities in Tom's Option Tools, and we can not only backtest a call or a put, but we can backtest option strategies. We can backtest trading strategies and even systems we've designed to see how the stock performed over time, whether it may be a moving average strategy, or it could be darknet, that's backtestable too. Money Counter, I'm going to show you, has a minimum 10-year backtesting already built in. We'll get into that soon. So that was the long 63 call. Last week, I talked about spreads. And I want to apologize because there was quite a bit of, let's call it static for lack of a better word, because I didn't quite have, I found out later on, I have satellite coming into my house in New Zealand because high speed isn't there yet. I'm not the whole country. High speed's there. It just doesn't come up to where I am on the coast. I think I'm about 5 miles away from fiber optics. So they're telling me that it may be a year or two before I get fiber. So I do know how to fix that problem in the future, but I want to apologize to all of you that it was a little bit frustrating. I get it, but I think we got through most of it without any problems. Now, we talked last week about call spreads and a little bit about put spreads. Remember, we like to use these when we've got higher volatility or potentially a higher stock price where it's just going to cost us more. I like to utilize the fact that if it's going to cost me more than $5 for the option, then maybe I should be spreading it to get that cost down. And so what that does is that gives me a lower cost, gives me a higher reward, a higher profit potential. And there's something else I don't have in here. Your break-even to expiration is going to be closer than just an outright call option. Now, last week we had some case studies, and I just blew through and just showed the one. I want to show you the ones that we were discussing. ExxonMobil. All right. So if you look at ExxonMobil, At the time last week, it was $76.36. We were looking at the July 77.50, 82.50 call spread. Was trading around $1.86 at that time. We liked it for $2 less. This is up this week from where it was last week. Right? Schlumberger, $44.47. This one also too is up a little bit from last week, and that was going for $1.75 by $1.89, and we liked it for $2 less. And then we look at the third, which was EOG Resources. Now this is one you really wanted to spread because it was expensive. It was $97.53, and the symbol was EOG. All right. So this one's off a few dollars, right? It's off about $2 from where it was last week. The options themselves, a $2 move in the stock, when you're doing something like this, is going to result in maybe a 25-cent drop in the option price because, again, you're going to drop on the call that you bought, but you're also going to drop in your favor on the call that you shorted. So there's that hedge that you see there, right? And then finally, HollyFrontier, which is down a little bit from where it was last week too. So we got two winners, two open winners, two open losers on this particular strategy right now. All right, but remember, this is 5 months. This is not 30 days or less, which is what we were talking about when we were covering Darknet. So at that point, what we've talked about, we've just done a simple review on calls and puts. I showed you last week's case study. We talked a little bit about spreads. I've shown you the 4 case studies we were discussing last week. And I want to also do a review of Darknet. Now, Jay, is there anything pressing that you need to hit me with before I move on?
No, sir. I mean, if you want to cover quickly why you go with debit versus credit spread, that's the primary question that was out there.
Well, there's two. A debit spread to me is something where you're actually expecting a move in the stock and you're going to get a higher reward than a risk. A credit spread, I'll typically do a credit spread when I'm looking for the stock to just not go in the opposite direction. Even if it doesn't go in my favor, as long as it goes sideways, I can make money. So debit spreads I use them for higher reward to risk ratio. Credit spreads, which we're going to talk about next week, are more of a higher probability trade. So next week we'll talk credit spreads. We're also going to talk about the layered credit spread and how you can use it as an adjustment, almost a delta neutral credit spread. We'll be discussing that with our guest trader, Devin Pearsall. So we also discussed Darknet last week. Darknet is a strategy that's been 9 years in the making. All right. We discussed Darknet. It's similar to Elliott Wave. And what I mean by that is it's a contrarian strategy that we use channels. And what we're doing is we're looking at 3 separate channels that fall on a stock. And when they all hit support, some area of support, then what we'll see from there is we'll see a buy signal. And where this differs from, say, a strategy like Elliott Wave. Elliott Wave, if you remember, I'm not knocking it. It's a great strategy. It has 2 kind of caveats about it. Number one, it's not the easiest thing to understand. There are wave counts that go in your favor. There are wave counts that come against you. They call them extensions. We have retracements. There are things such as Fibonacci ratios that are built into Elliott Wave to help get ideas of where pullbacks are going to happen. If Elliott Wave pullbacks happen and they happen more than you expect them to, the wave counts can change. All right. Darknet counts a Darknet signal will pop up as early as the first hour of the day. All right. Within the first even half hour of the day, we will start seeing Darknet signals. A Darknet signal can come and go through the trading day, but once the close happens, it's steadfast. It doesn't change from there. All right. And then the last thing is Darknet's a buying strategy only, because what we've noticed is with all of our years of back testing, we found that contrarian bullish signals are much better than bearish signals, and that's where I would rather put my money. Okay, so let's go through the case studies we saw last week, and then I thought I might spend a little time looking at, so if we have any case studies today, we'll go through and we'll look at some of those as well. So I'm going to slide to the right, Did you see that, Jay? I swiped right. I'm allowed to swipe right and left as long as it's in my tools. Okay. So here, what I want to do is I want to go to another one of my Tom's Tools units, and we'll go into our Darknet. And what Darknet's going to do is it's going to immediately pull up any trades that are potentially on the board as bullish signals. As you can see, we got several of them today. Now, when I look at this, I have three different types of trades potentially. I have buys, which are anything that you see like SPG, SQQQ, QID, CIM, SLG, VNO. These are those, they're first-time buys. If you see an R, like ERYR, all right, that's not a scientific formula. That's actually ERY, and there's a second buy, or what we call a rebuy. And then we can actually have a third buy-in, which is, we call it an add-on or an A. So you'll get first buy, rebuy, add-on. Let's go ahead and take a look at another way we can look at this is that I'm looking at all Darknet stocks right now. Now, what I can do is I can switch this from stock list only. I can switch it to stock trades. And if I click on search, it'll actually give me the stock trades right below the list. So everything that you see here, and then now, as you can see, what it's done is it's done a re-ranking. I can also, if you want to go straight past this and go into option trades, we can then go into two different types of option trades. We can go into call option trades, because remember, it's just a buying strategy only. There are call option trades. There's DOG. DOG is the short Dow 30, all right? That's not dogs of the Dow. That's a short on the Dow. You also see a short on the Russell. Then we've got Realty. We've got short QQQ. Now, what is this telling me? What this is telling me is that there is potentially some signals that are telling us that the market may want to go lower. In fact, take a look at everything that popped up today. You got short, short. Here's a short, ProShares short QQQ. Here's a ProShares ultra short Russell. Here's a ultra short Q, ultra short gas, ultra short. And again, these are 20-day trades. Ultra short SP 500, small cap bear, ultra short. I mean, just a lot of bearishness that's popping up on the screen. So let's take a look at a few of these. Let's look at DOG first. So remember, this is an inverse chart to what's happening with the Dow Jones Industrial Average. Remember, the Dow really fell apart toward the end of the year. Well, this short went up. The Dow has been moving higher, and the short's been going lower. But now the short's saying potentially it's time for a buying opportunity, potentially looking at the markets to go lower. Let's look at Chimera Investment. Okay. Now, I'm going to tell you what I like and what I don't like when it comes to these type of trades. Here's Chimera Investment. So Chimera Investment has some potential signals in the past. There was a buy signal at 17.5 and a sell signal a little bit higher than 17.5. There was a buy signal a little lower than 17.5 and a sell signal at 18.5. So it has had winning trades in the past. I like that. All right. What I also want to look at is I want to look at really this slippage number right here. I don't like slippage above 1. So what we can do is up here at the top, I can say anything less than 1% slippage. That's what I'm interested in looking at. And when you see that pop up, you're going to see real quick that we're going to dial down to just those trades. And notice, even though there are 5, 10, 14 trades at the top, only 10 of them had option trades that had the slippage factor at or below 1. So we got rid of some stuff that may be kind of junky for us when it comes to looking at potential opportunities. The other list I want to show you is you got this stocks in list with bullish signals. These are opportunities. The one below it says it's time to get out of these. So let's just take a look at these and see how they've done. All right, here's a nice one. Direxion Daily Real Estate Bull. The buy was down here at 15. The sell was above 20, almost 24. That's a big move. Big move, right? How about COLM, Columbia Sportswear? Buy was back around Christmas time, had a little bit of a drawdown, and that was at 84. It went all the way down to 80, so it had a 4-point drop before, look what ended up happening. Bang. Earnings, and then about a week and a half later, the sell signal comes in at about 104. Nice move. 20 points, 20% return on the stock itself. UPS had, now take a look at this. Buy signal, sell signal, little couple point move. Buy signal, sell signal, about a 5-point move. Buy signal, and that was below 95. Sell signal above 110. Nice move. Johnson & Johnson. All right, so Johnson & Johnson had a buy signal somewhere down here around 124. The sell signal came in today at let's call it 135. And then finally, Magellan Midstream. Magellan Midstream had now it had a buy at 60, it had a rebuy at 56, and it had a sell at 62. So those two together, the first one only had a 2-point return. The second one had a really nice 6-point return. And then we saw a little bit of a move here. Let's call it 2 points from the buy to the sell that happened with MMP. All of them were profitable. All right. Again, how do I trade these? Well, I look at this every day, and I sort out, and I like to see the trades that have the least amount of slippage. So, when I go along here, which one has the least amount of slippage? Here's a 0.3, that's Simon Properties. Here's a 0.3, and that's SPXU. But Simon Property Group, we could take a quick look at. Look at this one. Simon Property had a buy at 175 and a sell above 185. Then a buy at 180 and a sell close to 190. And then the big drop happened. It had a buy just off of 160, and it had a sell at just below 175. The buy came in today, as you can see. That was at around 175, 180. And where's it likely to go? Well, if you base, again, you look at what kind of moves this has happened in the past. I think that this could easily take us up to 190 and maybe even beyond it. Maybe we could look at 195 as a potential. So to take this from an idea of spotting the opportunity to actually creating the low risk trade is very simple. What we do is we'll use SPG and we'll use 195, and we'll be looking at a month out. So let's go to a stock and option table. Here's one. Let's go ahead and re-update us to today's date. SPG, that's Simon Properties Group. Now, March 15th, that's the one I want to look at. So I'm going to come down, I'm going to look at the March 15th, and I know 195 is where I'd like to go. All right. But we're definitely not going to be spreading this one. This one looks like it could potentially be, well, if we look at the 180 calls, for instance, those are $4.23. How much are they going to be worth at 195? That's the thing we have to do. And so we look at our risk graph and we say, all right, 195 is somewhere around here. So I put my finger on there and it shows that at 190, let's get it down there as close to 195 as we can. All right, there, 190. It's going to be over $1,000. All right, so that's a triple compared to where the return is. So again, what do? If we like this, we place that order and we get out a half of it and it doubles in value. That's going to probably happen somewhere around the $188 mark on Simon Properties. And then once we cross into that 195, you got more than a triple there. All right, so that's Simon. Let me just show you before we move on last week's case studies. So last week I showed you these and I popped these out before the close. So what ended up happening was we looked at FXY, SPX, Amazon, CP, and EZA. Guess what? Amazon didn't hold its buy signal by the end of the day. It was dropped. But let's take a look at the other four and see how they did. So FXY, remember, we're looking at $86.31. All right, look where it is. And here's your buy right here. So this was a rebuy. And we're pretty much just at where we were at that time. Okay. SPX moved higher, went from about 27.40 to went up as high as 27.90. By the way, the options on SPY actually doubled from that move there. Actually, no, I take that back. They did not double. They were up 50% as of yesterday. All right. So that one's a clear winner. Canadian Pacific, look at this one. The buy signal comes in just around below 196, and now it's at 208. Huge, huge move. EZA, this is the South African index. Buy signal down here around 52. It was as high as 54, and it pulled back to about 53.5 today on the close. But you can see that the signals that we talked about last week, all of them are performing well. I think one's a break even. The other three are clearly in the win zone. So those are doing very well as we move along. So Jay, are there any questions on Darknet before I talk about tonight's topic?
No, it looks like they're tracking just fine, Tom.
It's, it's a very simple strategy. It's objective, meaning that, and what I like to say is objective is that you see what I see when the signals come out. All right. It's very subjective if someone without the strategy that we have, Darknet strategy, tries to trade it. I mean, think about this. How many charts can you look at and draw triple chart lines on it and try to find support resistance? And a lot of us out there can, and I'm not doubting that. But if I am able to scan the top 325 stocks, across the board and immediately find ones that are getting triple stacks on support, then I'm able to just utilize the computer and do it much faster. And by the way, we've done the back tests on these stocks, and they have performed very well as a whole, going back 5 years. So at this point, let's go ahead and start talking about what I want to cover with you tonight. And that is, again, spotting the opportunity, creating the low risk trade, and then planning, executing, and managing that trade. And so what I want to do with you tonight is I want to spend a little more time in the tools and going through and showing you how I create these trades. So we're going to do that tonight with something called the money calendar. The money calendar is something that I created years ago. Really started taking off with it in about 5 years ago in 2014, and I shared it with some of the beginning students and members of Tom's option tools back in, it was 2015, I think, when we really started sharing this. And it's continued to work more often than not ever since we started it. I mean, it's just one of the best long-term tools that I've ever come up with and have ever shared with anybody. It give you an idea. What it does is it hunts down these simple short-term patterns. So it will look through millions and millions of patterns on the top 325 stocks. That's what I use. And so this thing will look through days of patterns. And what we're doing is we're doing time patterns here. There's nothing fundamental about it. There's nothing technical about it. What I believe as a trader when it comes to what we've created on the money calendar is that patterns happen more often than not, and we don't know why, okay? And that's okay, because as a trader, anytime I ever asked why for too long, I missed the opportunity. So the money calendar hunts down these patterns using at least 10 years worth of historical data. And from there, what I do is I look for trades that have those risk to reward ratios of a minimum of 1-to-1, but I found them at 3-to-1, 5-to-1, even more. And I believe this particular software tool that we use is so valuable that I ended up filing a patent for it, and we're in the process of being granted a utility patent for this particular application. So it is that valuable to me. Now, what it does is we have several different views on Money Calendar. This is an example of what it looks like when I first turn it on. It's a calendar, all right? Only difference is this calendar shows green, yellow, and red, and everything in between on it. And so what it's doing is it's giving me a heat map of what the overall view looks for that particular day. And what I've learned is the first 2 weeks of January, typically we sell off. Then we start to the rest of the January, the buyers come in, all right? and buyers start to come in, and again, 9 out of 10 years, 90% of the time historically, this happens. We also built in a time frame like 2008 when the market dropped really hard. You also know that we had the same situations happening with the bumps that were happening in 2011 and I think 2013. We had some bumps as well. So we brought in bullish moves, correction moves, sideways moves, volatile moves, and sleepy moves. And that's what creates the money counter. And we found those stocks that follow the same patterns year in and year out and give us the best day to buy and the best day to sell. From here, what I can do is I can click on any particular day. And as you can see here, look at the 16th, right in the middle. 57 trades came up, and 38 of those had been bullish trades and 19 were bearish. Now what I can do is if I click on this particular dot, this area here, it will bring up that day. And so in this case, we're looking at January 9th. And you can see here, Priceline.com was at the top, and you got all these other stocks as well. And this shows up, and what it does is it gives me the symbol. It gives me a green or red bar that lets me know whether it's bullish or bearish. It then gives me a number at the end, tells me how long the trade is designed to last, that pattern. And then I get information like the net profit, the accuracy, the average profit per trade, the ending date, and I have something out there on the end called Power Meter. And Power Meter tells me whether or not we are going into a positive or negative trend. I like positive trends. It just tells me that the pattern just keeps getting better and better and better year after year as we get closer to today. From there, I can look and see some details. I can see the details I just discussed. I can also see the trade length. I can also, from there, move on and look at the actual pattern that happened each year. I can look at things such as run-up and drawdown, which are really important to an option trader. It gives me an idea of how long I'm willing to stay in the trade if it goes against me or if it even goes in my favor. All right. As you can see with this particular trading pattern, it ran well into getting better and better and better and more profitable. Right. In fact, at 1 year, Priceline had recorded more than 150 points during that 30-day pattern. Now, from there, what I'll do is once I establish what stock I'm looking at, today, the start date, the end date, and then the average move that it's going to make, I'll go out and I'll say, all right, this is the option trader's biggest dilemma is anybody can buy a call if they're bullish, but only a small fraction of option traders actually take the time to figure out, okay, what am I buying? Why am I buying it? Where is it likely to go? And how long is it going to take to get there? All right. What am I buying? Priceline. Why am I buying it? Because Money Counter's giving me an objective trading strategy. All right. Where's it going? That's my average profit, where that average move is. And based on that, that's where I want to stick my trade. How long is it going to take to get there? I look at the end of the Money Counter pattern, and then I take that date and go out and find the option trade that expires around that time frame. In this case, we were looking 30 days out. We're looking at a 1590, 1600 call spread because no one buys Priceline options at the $1,590 or $1,600 mark on their own without spreading them. It just doesn't make sense. Now, in this particular pattern, the stock actually increased over 5%. So if the stock increases 5%, that means my option could increase quite a bit more. And that's just the way it works over and over and over again. So rather than bore you with case study after case study on this thing, I thought what we could do is we could spend some time, a few minutes, looking at some case studies from today, or how about tomorrow? Let's look at tomorrow's case studies tonight. So let's slide to the right. And let me go back to the top, and I'm actually going to go into Tom's Tools. I'll pop over to Money Calendar under our Complete Trader. You can see this is February. You know what? I got to dial this down a little bit. There we go. So what's today's date? February 21st. We're coming out of President's Day. It was a 4-day trading week. Tomorrow looks bullish. Tomorrow's got a 94% look onto it right now. And so I'm going to click on tomorrow, the 22nd. Here are all the trades that are popping up. Now, I'm going to let you guys know there's trades on here today or tomorrow that were on here today, that were on here yesterday, that'll be on a couple of days from now. So these, we're constantly looking at, again, trades that like to overlap themselves. I just like that even better. But the one thing that I do over here is that I'll move over to Power Meter and I'll click it. And I want to see the Power Meter stuff that's at the top. So take a look at this. QID is at the top. It's a bear. But I like what's next, Google. Google's been having a bit of a rough time lately as I've looked at that chart. Let me do this. Let's go look at a stock chart of Google today. So I'm going to pop up and look at GOOGL. So Google, well, this is just the last 20 days. Let's look at the last 100 days. All right, let's take a look at Google. So Google is way off of its highs. I mean, it capsized. It went from 1220 down to 980, came back to 1140. It did not have a great day today, but it's going into a pattern where it's typically gone higher. All right, so let's take a look and see some more information on Google. So in order to do that, I'm actually going to click on the symbol Google, and here we go. It's between February 22nd and March 18th. So I'm going to be looking at the March 15th puts, all right, because it's close, very close. Second thing I see is that the last 10 years, it went against us in 2011. There was a 24-point drop. If I click on that, I can actually see what happened. So it went sideways for all of about a week, and then it started falling down. Now in 2011, it was only $300 a share. But look what's happened in the last 4 years. All right, 2015, up. Had a nice rise up, and then it just kind of fell back a little bit, but then gained toward the end of the pattern. 2016 was up, back, and up. 2017, we kind of did a little bit of sideways action before rolling higher. And in 2018, we saw Google go from 1120 to around 1140. So it was up 1135, so up about 15 points. Okay. So I do know that we have a positive power meter because if you look at the average of this, the average is going in the direction of higher. I also am looking at about, on average, let's call it 25 points when I'm looking at what's occurred just in the last few years. So what I'll do is I'll then go to my option trades. Let's go to option chains and let's take a look and see what we can do with Google over between now and March 15th. Here's the March 15th options. You know what? I want to bring this up so everybody can see it. March 15th options, there's 166 strikes, 22 days to expiration. That's close enough. Come on down and let's see what we got. So we said we wanted something, we were looking at something that's going to move, potentially move 25 points. Let's round this up to 1105. That's going to put us to around 1130. 1130. If you see what the March 15th 1130 calls are going for, they're $12.70. I don't want to buy those. I want to sell them. I want to sell those calls because that's my target. Remember, buy today, sell the target. So I don't want to buy all the way down here. That's going to be kind of expensive. All right, $23 minus 12 is still 12 points. But if I come down to, let's call it the 1120s. What if we bought the 1120? What's that going to cost us? Buying the 1120, selling the 1130. Got plenty of time for Google to run. It's done it before. It's done it 9 out of 10 years. So again, the concern is how much is it going to cost us? And here we go. So I'm looking at $380 to make potentially $620. That's 163% return on your cost. So that's not bad. I can see right here that all I got to do is just get up to where we were not even 2 weeks ago. I mean, not even that. We just have to get up to where we were 2 days ago, and we're already in the profit zone. All right, so those are the things that I wanted to share with you when it comes to Money Calendar. Spot the opportunity. That's the Money Calendar itself. Create the low risk trade. We just created a trade that is sensible. All right, again, your job is to find out what matches you in terms of risk to reward. And then finally, you move this over into your brokerage account and you plan it, you execute it, and you manage it. All right, planning it means putting it in place. Executing, obviously, is when you hit the button. And then managing it means when are you going to get out? All right, I like to take half my profits when they double in value, and that means this 380 has to go to $760 out of a possible 1,000, which is the 10 points, and it can easily get there. So if I bought 2 of these, I'd sell one, and I got filled on this price. I would sell one of these. Again, I would be selling to close the March 15th 1120s. I'd be buying to close the March 15th 1130s, and I'd be doing that for a credit of $7.60. That means I invested 380, I make 760, I double my money, and if I take half off, now I'm playing with house money. All right, so that's Google. And again, like I said, we could go on and on and on, but the thing is that I just wanted to share with you some case studies with what we've done with Google. You know what? Let's look at a couple more here. Actually, what I want to do is I want to show you some other stuff that you may not know exists in Tom's Option Tools. So pop on over to the tools and take a look at this. In the money calendar, we've added a few things. We now have something called Money Week. Money Week is a way of looking at weekly patterns, where those of you, if any of you like weeklies, where you buy on a Monday and sell on a Friday, or you're buying on a Wednesday and you're selling the next Wednesday, you can take a look at this particular pattern here, and it finds the best patterns that happen within a week. We have a money holidays pattern. Jay, what's the next holiday for the U.S. that's happening? Do you know? I mean, we just got out of one just a few days ago. When's the next one?
I can look that up here real quick.
Oh, come on, you don't know? It's not Easter. Here, let me help you out here. You will be saying the Pledge of Allegiance. You will be remembering our veterans.
I'm sorry, I was trying to be tongue-in-cheek, and that didn't go over well. Memorial Day.
Exactly. So Memorial Day falls on a Monday. And so what the Money Holidays piece can do for you is it actually looks at patterns that occur before and after holidays and finds just those best patterns on a variety of stocks. All right. And you can find the patterns that best fit that. We have the Money Calendar, which you've seen. We have something called Money Calendar Trader. Money Calendar Trader is kind of neat because it does a lot of the work for you. You just basically bring it up, click on search, and it will search for that particular day. And it will, if it finds anything, in this case, it was finding Adobe Systems earlier today, and it shows a potential trade. It shows you the trade entry date, the maximum risk, the maximum profit, as well as the money calendar end date and what it should expect to return on investment based on all of that back data. All right, we call that Money Calendar Trader. The other ones that I want to share with you are, some of them are actually outside of stocks. We have a crypto calendar. All right, now I promised all of you I was going to do a session with you on cryptocurrencies, and I'm going to do that in a couple of weeks. All right, I'm going to do a bonus session with you on cryptos, and it will be sometime in March. All right, but we have a crypto calendar. I'm going to show you that too when we do the bonus session. We have a crypto clock, which a crypto clock actually looks at what the best time of the day is to buy cryptocurrencies. A money clock, the best time of the day to be looking at the stock market. Let's just give you an idea of, a money clock's under maintenance right now. But what we can do is we can go in here, and it looks like a clock, and we can go ahead and put and key in whatever potential stock we're interested in looking at, and we can key in the number of minutes, how many we want to display, etc. And it'll go out there, and it'll find us the best time, for instance, the best time of the day to buy Apple and the best time of the day to sell Apple. That's all available for us in the money clock. So, we've got, and money calendar application is just, let's say you want to see what's going on with Apple. All right. So we can go in and we can actually find that symbol Apple, and we can tell the computer, I want to look for trades starting in the next 10 days. Look back, you can look back 19 years if you want, 20 years if you wanted to. And then show the top X results. Let's look at the top 10 results. Going forward for trades that are up to 30 days in length. Click on the show button, and you can see Apple has a 70% to 80% chance as we look up and down the top 10 trades. 29 days to expiration. This one has the biggest return over the next 29 days. And when we click on it, we can get all the information we need to see about the details and the trades just by clicking here. right? That is our money calendar app that's available right now on the software. Now, don't get that confused with iPhone and Android apps, which I'm going to show you in just a few minutes. All right, but that's all of our money patterns that we've put out in the last year that we wanted to kind of it's additional stuff outside the money calendar, but I thought I would share some of that with you guys. All right, so any questions, Jay, on the money calendar?
There was a question that came up when you first started this, and the question was whether or not money calendar is based off Darknet. I emphasize that there are two separate scams, and maybe you want to elaborate.
Yeah, Darknet is technically based, looking at channels. Money calendar is time-based, looking at time patterns. And yes, for the question that comes up, the question that somebody's asking or thinking about, do you ever get a trade where you have a money calendar bull and a Darknet trade at the same time? And the answer is yes, that does occur, not all the time, but when it does, I love that, because now we're stacking buy signals that are coming from two completely different places. All right, let's look at one more. So
there's a write-up in your weekly newsletter too. I won't belabor it here, but you said you might have Jay do a video on it. I'll get a video out on that too, so when people are in the tools or coming on board with the tools, they'll be able to see a way to both find those that stack on each other.
Awesome. Thanks, Jay. Take a look at McDonald's. So McDonald's has a pattern that happens from February 22nd, that's tomorrow, to April 4th. That's a long-term pattern. So, we have to look at a couple of things. We got to say, all right, how well has it been doing? About 5 points, nothing huge on the average. That's good to know. What did it do last? It did almost 6 points last time we looked at it. So from here, we have to go back to our stock and option area, and then this time we'll look at MCD, and then I'll just take a look at MCD. Now I have to go and look at April options. Now there are some options that expire on April the 5th, so let's just take a look and see what those are doing. And I'm going to look at the at-the-moneys first, those 182 halves. 360 by 390, that's not so bad. Let me add one more in. Let's look at the April 18th options. And the reason I might look at the April 18th is because I want to see if I can find something that has better slippage. This is 30 cents for the at-the-moneys. And this is, well, 15 cents for slightly out of the money. Let's take a look at the 185s. 245 by 68. That's better than 20 cents. So this tells me we'd be better off going with the April 18th and buying a little bit more time, because the difference between the bid and the offer makes more sense. Now, if we're looking for something that might move, maybe 5-6 points, perhaps what we could be looking at would be buying the 185 calls. All right. Now, the problem is that the 185 calls, we're not going to make it to the goal line. All right. But if we sell the 190 call, that brings in some money. Instead of paying $3.20, we could be looking at a spread where we're paying $1.66 or $166. So we've cut that in half. We've literally cut the trade in half, and we've also brought the break even down quite a bit too. So 166 to make a potential 334. That is buying the 185 calls in April, selling the 190 calls in April on MCD. So again, spot the opportunity, create the low risk trade, and then finally plan, execute, and manage that trade. So we offer, and you guys have been following me now for the last, this is our third week together for 2019 for my Optionetics group. And you've been following along, and a lot of you gone out and taken the 3-day or the free trial that we've offered, and you've gotten to pick either for the option trader package, the contrarian trader package, or the complete trader package. And the option trader package is just all of our option tools that are available to you. But if you want Darknet, then you have to, and our option trader package is $129 a month. But we do have a special on that. The contrarian trader package is all of the option trader package plus our Darknet contrarian trading signals, and my weekly newsletter comes with that as well. All right, $299 a month value. We do have a special on that for the week. The complete trader, which is everything you see here, option, the contrarian, Darknet, and the money calendar. All right, we offered that a free trial as well, and that is a $399 monthly value. We offer a special monthly price on that But today, I've got something. I want to do something for 24 members because we do have. I do want to open up 24 new spots today for something that we call our annual trading package. Now we're spicing it up a bit this time because we got some new stuff happening. I'm going to share that with you. So all of that are, you get a 1 year of our tools. All right. 1 year of our tools, you get 1 year of our support, you get 1 year of our forums where you're able to talk to each other in the tools area and to us, and you get all the videos that support it as well. Okay, but what we're doing is, and of course, if you're looking at the annual package, we're going to throw in that weekly market outlook, which comes in every single week. We publish that on Wednesdays, and that is available if you go to the tools. For those of you who are active tool members, maybe you don't know this. If you go to Tom's Tools and you go over here to, you can see it here, newsletter. And that actually brings up our newsletter. Here's the one that was just published recently. A little bit of what I was having last week. That was fun. That was fun. It was a little bit off the grid though, I'll tell you. And then we've got, we've got some outlooks on the major averages. And then we also put in a piece where we start talking about things like different things you can do within the tools. We want to make sure that you have an idea of what you can do with these tools. And so every week we're teaching you. Sometimes we give case studies out. Sometimes we're just simply showing you how to. For instance, how to create a folder, how to create a list, how to create a portfolio, how to manage portfolios, how to back test. Just how to do searches. There's so many things you can do even with just our option trader, but stacking that on top of Darknet Money Counter, you really have a powerful piece of software. Our software was in its early stages. It was actually voted best of the web from Forbes magazine for several years. And it's just gotten so much better from that, guys. So that's the weekly market outlook. Now, what we're doing for the annual package is this. This is why I'm offering this to 24 people, because I have a complete home study course. This is a brick, all right? And what I mean by that is that it's actually it comes to you home study course. It also has audio CDs. I did the audio CDs myself. It's hours and hours of our fundamentals, enhanced trading methods, technical analysis advantage, and then of course the resource guide that goes with trading and with Tom's option tools. So we're going to ship you out this entire study course if you sign up for that package that we have that I'm going to be sharing with you in just a few minutes. Also, our bonus 2, we're going to throw the whole money patterns package into the money calendar. So you're going to get not only the money calendar, but you'll get money week, money holidays, money clock, money calendar trader, all the crypto stuff, as well as the money calendar itself. All right, some really cool things you can do with this. We have several of our partners that are using this right now, and even when we're doing maintenance on them, on it, sometimes they're emailing us saying, "When's this thing going to be back up? Because I need it." I mean, that's how addicted, that might be the best word I can come up with right now, that a lot of our traders are to our patterns, because you just can't find them anywhere else. There's nowhere else on the planet you can find this stuff. So that's bonus number 2. Bonus number 3, which is going to be coming in March, is that we now have a money calendar app, and we now have a Darknet app, which we are testing right now. These are going to be available in March, and they're going to be available. They're going to be available to our partners, and they're going to be available to our annual tools subscribers. All right. So if you want to take advantage of getting this on your screen, if it's if you want to have this on your iPhone or your Android device, then being an annual tools member, we are going to include these for you. All right, and then we'll help you get them set up, and we'll get you started right away.
Tom, are you seeing these comments coming through? I mean, we like to put some testimonials out there. I mean, we got them flying in right now. I mean, Howard's talking about this, since he's been a longtime user of Tom's Tools, he can say it's the best value package he's ever subscribed to. And that's across everything: flights, house buying, other education.
I know. I mean, and the reason why is because I think it's because I think we and I try to say this as humbly as I can. I really don't want to be a diva, a trading diva, but as humbly as I can, we use what we offer to you guys. We use this stuff. I'm using it every day. You know, and so it's got to pass my smell test before it goes out to anyone. And so I'm using it. I love it. Is it 100%? No, nothing is. I'm going to let you know that right off the bat. All right. But if you could see, if you have the ability to spot the same thing happening over and over again, whether it's time-based or whether it's somehow technically based, and nobody else can do what we do, then you're going to be very comfortable, you know, going and following these simple rules and of course these simple apps. Let me show you a couple. For those of you guys that are jumping on and want to do this, I want to show you real quick. This is the darknet screen that you see here. In fact, let me go grab something real quick before I go any farther. We do have a, nope, I don't need it. This is the darknet screen. So this is actually, I just picked this off of my phone this afternoon. So what it's going to do is it's going to show you the bullish signals. It's going to show you the rebuys. It's going to show you the final add-ons, and it's going to show you what has been stopped out. And a stop out just means an exit. It doesn't mean it got stopped for a loss. It just means it's time to get out of that trade. All right. And so here's a few of the ones that popped up today. But you can actually create within our tools your own list of stocks and trades where you can follow your own stuff along. And so that's really neat too. Now, what I do is when I turn the phone sideways, then, you know, I click on one of these symbols with my finger, then the chart pops up. And you can see CPA, there was a buy, there was a sell, here's the other buy. So I flip it sideways and boom, there's my chart. Click on the X, you go back to this page again. The money calendar looks like this, several different screens, all right? Shows you today's date, gives you a green, red or yellow or orange, different color based on bullishness to bearishness. You can see the number of stocks that pops up. When you click on this yellow, this area here, it then brings up all of the list of stocks. You can scroll through this with your fingers. You click on one and it pops up. So you can see here Adobe, I clicked on Adobe and it brings up the date, brings up all the information that we see on the computer. And if I click on yearly trade results, it brings up the yearly trade results. And if I click on any of these patterns, it brings up the chart as well, just like the chart that I just showed you earlier. This is really, really neat stuff. It's so slick and it just looks really good. You know, I really love using this on the phone, and I'll use it on the phone when I'm, you know, maybe kind of hanging out, whether it's outside or whether it's maybe even in the kitchen or wherever, where I'm not in front of my computer and I want to make a trade on my cell phone, or even if I'm out, I can just flip through the thing, click on it, and then move right into my brokerage account and place my trades there. So really cool stuff. These are our apps. They are, like I said, all of our annual complete traders are going to receive the Tom's App Pack as a bonus for the annual subscription. It'll work with both iPhone and Android devices. And the app pack will release in March. And so what I mean by that is we're expecting to release it the first week of March, not the end of March. So we're talking about a little bit more than 1 week from today. So those of you that sign up, you're going to get that. That's going to be part of that package. And we're really excited about offering that as part of our annual Traders Pack. So, you know, Jay said it, there's a lot of comments that are coming in from our current guys that are on watching this. A lot of our partners came in tonight because they wanted to see some of what we're doing with the most recent apps. And so, you know, that's a lot of folks who are using our products already or talking them up. But we've had some just, you know, thank you to all of you who, you know, have used our products, have loved our products, and have told us about our products. We you know, we couldn't be happier getting that information from you and just knowing that we do, you know, have some of the best stuff in the business out there. So our annual package, you know, and like I said, we've been with you now for 3 weeks now, talking about different aspects of system strategies and then going to our software. But I want to offer a few of you, not a lot of you, but a few of you, the ability to come in and become an annual trader with us. And so this year's annual trading package is going to include Option Trader, the complete trading Contrarian Trader package with Darknet, and Money Calendar as part of our Complete Trader. Comes with my weekly newsletter, member forums, videos, live support, our 3 bonuses, which is the home study course. We will ship that out to you immediately upon payment. Also, the Money Patterns package, which will be included too. And bonus 3 is the app pack for iPhone and Android devices, which we will be emailing you about in March, very, very early in the month of March. We're offering this at, I think, what I believe is a fantastic price, which is quite a bit off what you'd end up paying for. All you're doing is we're just telling you to prepay that complete trader package at the reduced price of $199 a month. So that times 12 is $23.88. You do that and you get all the bonuses that you saw there. All right. The site or the link that you want to click on is HTTPS, because we're now a secure site and have been, www.tomgentile.com / and I'm actually going to type it in here for all of you, / annual trader. All right, believe that's it. So I put it on the board for you there. I'm clicking on it right now. That's going to, if you click on that link I just sent you, it's going to take you to our annual trading package. And then from there, let me go ahead and let me just cut and paste this into a Q&A so that all of you can have access to this page. All of you get access, but not all of you are going to be able to get this package because we only have just a few. I think we are we took the number based on the number of the course packages we have. So there you go. So if you click on that, you'll see everything I've discussed with you, and you'll see 24 memberships are available. So if you click on 24 memberships there at the bottom, that's going to take you to our terms of service. Read this over. All right. If you agree to it, click I agree. That's going to take you to our PayPal page. Now, the PayPal page is actually very simple. You either come in and by using PayPal, you can check out. It's going to say upgrade annual subscription. All right. That's the upgraded annual subscription. You will not find that anywhere on our website. I don't publish it on our website. There's no page that you can link to from our website. I'm giving you the page tonight because the page is coming down soon. All right, there's only a certain amount of these that we offer. And I might add this too. This may be the last time that we offer this. And I can't tell you why, but I can tell you that, we've offered this, the ability of doing a year subscription with us with bonuses the last couple of years. This might be the last time we do it. All right. So, and then also, if you do sign up for this, you're locked in every year. All right. Every year we will charge you the $23.88 for the entire year, and you will get any and all bonuses that come with that. So, again, if you're a PayPal user, you can check out with PayPal. If you're not a PayPal user, you can also go in and do this without PayPal. You can use a Visa, MasterCard, American Express. All right. It's asking me to subscribe because I am a PayPal user, but that's it. And then you're locked in at that rate. You will get within 24 hours. You'll get your username and password from us. Once the app pack is ready, you're going to get an email from us as to how to log in, the directions, what you need to put in for your username and password, and then it's really a one-time feature. And then after that, your app will always work as long as you maintain an active subscription with us. So that's it for tonight. Jay, any questions?
No questions. I just keep trying to tell people thank you, appreciate the sentiments on you. The kudos that's just keep coming on. This is one of them. Yeah, no, I mean, I know people love you and appreciate you, but I mean, to see it coming back tonight as full and as enforced as it is. I know you don't like to toot your own horn, brother, but I mean, you've earned it, and it's a positive reflection. So, I mean, folks, I mean, you'd expect us to say good things because, we're, with Tom, we're working with Tom, we're using his tools and such. But when a fellow student, that's not on Tom's payroll or doesn't have anything vested other than just learning as much as they can from him, come back and say it. I mean, that speaks volumes.
Well, thank you all. Thank you, Jay, and thanks to all of you. Like I said, this is the reason. A lot of the reason I get up in the morning is for all of you that show up that want to learn how to do this. I mean, I love the markets. Don't get me wrong. I love the markets. I love trying to outsmart whoever's on the other side of my trade. but I also love teaching. Trading is someone asked me, why, if you're so good at this, why do you teach? And I had a very simple answer for him. This was a guy in New Zealand that is actually a professional poker player and a professional sports betting. And he and I had a lot in common because he has his own systems, rules-based trading systems, and we kind of, we gelled together. But he says, hey, why do you do this? And I said, it's simple, because trading is a lonely business. That's it. It's you and your computer and, maybe financial television if you want to hear somebody else talking, but it's a lonely business. And so a lot of the reason I do it is because it gives me that camaraderie. It allows me to teach things that I know to a small group of people without still upsetting the balance of what it is that I do. And, I just love doing it. And I see no reason why I'm not going to do it in the future. So guys, homework assignment tonight. Take a look at those money calendar trades that we talked about today. Both one was McDonald's. I'm trying to remember the other one we looked at. Google. I'm actually in my head. I'm going, okay, it wasn't the top one. It was the second and the third one. So Google and McDonald's, we'll keep an eye on those. I'm probably going to end up trading both of them here sometime tomorrow and getting long positions on both of those. I just don't know what I'm going to end up doing, but I'm going to be doing something very similar to what I talked to you guys about. It's definitely be on the bullish side. All right. So homework assignment, and like I said, if you're interested in this package will sell out every year. We only put a certain amount of them out there every year. They sell out, in less than a week. So I imagine by the time we come back next week, they will be gone. I'll tell you what won't be gone next week. We won't be gone next week. We got a bonus session with you. We're going to be doing credit spreads. I'm actually going to do 2 bonus sessions. So credit spreads are next week. And then sometime in March, we're going to come back together. We're going to review everything, and we're going to talk cryptocurrency, because that's an area where a lot of people know very, very little. And if I could teach you what to stay away from in terms of cryptocurrency, I think I've done my job, but I'm going to do much more than that. So with that, have a great night, everybody. Again, questions, comments, etc., you can hit us up at support@tomgentile.com. And, whether it's questions on the education we talked about, or if it's questions on any of the tools that you have that you see in front of you, if you have questions on those, feel free to ask us as well. Thanks, Jay. Thanks, everybody. Have a great night. I'll see you next week. Bye now.